Hi guys, welcome to the Savvy Money Show. Me, your host Sean. Well, we're going to start with this Halloween edition. I thought I'd scare you all by having a picture of my face on. If that doesn't scare you, nothing else will. So, let's get into it. I've had lots of companies banded round, such as Tootsie Rolls, because apparently Tootsie Rolls have been selling out. Problem with Tootsie Rolls is I looked into it and you have to buy and sell. You've got a time limit on it. So I don't like having time limit on stocks. Yes, I think it'll do well, but you have to, you'll be playing next earnings report. And you could do that, but it's, it's not something I'd like to do. So we're going to look into the stocks. Now, remember last Halloween, because of the Rona, we couldn't have as big a Halloween as before, but there's been a lot of searches for Halloween related products. Now, so I'm looking into Six Flags. Why? Because Disney is already sold out for Halloween, and Disney also has other things around it, so that Halloween won't be as effective. But Six Flags it will. You look at it, its market cap is half of the enterprise value. The problem with Six Flags is the financials. Now, it's been bringing in revenue, which is good, but it's the balance sheet and the cash flow which has me worried. The balance sheet, the assets, the liabilities. Now, we know tapering is going to happen, and Six Flags, again, I think is one that you have to be playing the earnings report. But other than that, I think bringing in good income and regular cash flow. Now, we can look at Disney, and you will get people saying, oh, it won't have as big an effect. But the candy they sell there, the tickets they sell there, and even for the people who don't go to the parks, there'll be people going on Disney Plus or Premier Access Disney Plus to have like horror parties indoors. And we all know how all that's been doing recently. I just think that's a good one to buy and hold. I do think Disney Plus on its own is worth $200, and the rest of it is just all gravy. But this isn't about Disney, this is about Halloween. Don't forget to hit that lovely like button, and don't forget the sexy subscribe button. A lot sexier than me, just ask the wife. And if you want to be a hero, hit the bell notification. You'll be notified when a new video gets uploaded. And why not check out the links in the description below. If you're looking for a free trading platform, you get a free share worth up to $200, depending on the platform you use if you deposit a small amount. Spoke about Tootsie Roll. One I prefer to Tootsie Roll is the Hershey Company. Why? Because even if you don't sell after the next earnings report, is still one that you're not going to get decimated by. It gives a 2% dividend, which you've missed by the way, but you can see here this trailing PE of 25, forward PE of 23. So it's tiny growth, and it's a well-known name. Now, next one is going to be Party City, and this could be any costume one like Jack, anyone you want, but I'm going to go Party City. Why? Because it's a $950 million market cap against a $3 billion enterprise value. It's forward PE under 10, which I know is going up, but still it's under 10. Price to sales 0.44. Price to book is 8.73, which is a lot, but that's still not too bad. Yeah, it's got a lot of revenue coming in, and we can see that it's been increasing its assets while bringing down its liabilities just a little bit here and there. Now, I like to see a company that's bringing down its liabilities. Now, it has 66.5 million cash on hand, which is good, and but again, this is one that it is one that you can hold like until like all the way through to Christmas, and if you want to, but it's one that, because the PEG ratio, forward PE, the price to sales, but I would only hold for the next earnings, to tell the truth, which is going to be November. Hi guys, just in case you're unaware, you have until the 30th of September to sign up and be in with a chance for £2,000 worth of free shares. You will be guaranteed your free share worth between £10 and £250, but then between £3 and £200. They changed it recently, but you will also go into a free draw where you will get added share worth £250 to £2,000. Why wouldn't you? As well as that, tickets to Rita's virtual Paris show. Now, thing is, you deposit £3, you get free share. You know, it's a no risk situation. Me, I'll go. If it was me, I'd just stick a tenner in and see what happens. So only a tenner. Think of it as a raffle ticket, but you're gonna get a free share with it. I'll see you in the next one. Spoke about Disney. Here's another one that isn't going to be massively impacted, but still it makes up its costumes, it sells the candy, and it sells the decorations, so it still will have an increase in sales due to it. It's Walmart, and this is one that I don't mind buying and holding long term. I try to spread across different ones, like ones that are immediate sell, ones that are between immediate sell and average, and ones that are long-term hold. This will be a long-term hold. Gives a 1.5% dividend, which you get in December. And you see here, the market cap is below the enterprise value. Price to sales is 0.7. Price to book is just under 5. Now it's a trailing PE of 40, but this is a good part. The forward PE is 22. Now, they say for a growth stock, you look for it to have forward P of under 20. And this one's forward P. The P is going to jump from 40 to 22. It's a huge jump from a company of this size. And as I said, I think this Halloween, a lot of people have got a lot of money and they're going to celebrate, spend a lot of money celebrating. It hasn't had the run up I expected, and I think anytime it comes below 130, I will be or around the 130 mark, I will be picking it up. But honestly, this is one that I do like for long term, and I'm surprised that it hasn't been going up. This is like the Amazon of the retail world. They're doing that home deliveries to match Amazon. They're doing online shopping. They're doing all sorts of different trials with the software, and there's just so much going on in the background that really we don't have to look at the financials, but we will. And this is the, you see there, 566 billion, costs 424 billion, 142 billion profit. You know, I mean, you can see how, you know, I don't like having such high liabilities with interest rates rising, but no doubt they do that so they can offset their profit, offset it against their profit. Now, thing is, you see there, they've got near enough 18 billion on their balance sheet. So if they wanted to, they could go and acquire someone, or they could go and pay off a chunk of the debt if interest rates suddenly rise. At the moment, it isn't worth them doing it because it's just so low. And as I said, it's all tax deductible. But you've got to look at this, it's going down. What, during a prime selling time? Why? Because those liabilities, people are running out of companies that have high liabilities. But these directors at companies like Walmart have been around for a long while. They're not stupid. That's why they're stacking cash so they can pay off a lot of it. That's why they haven't increased the dividend like a lot of companies, so that as soon as they come out with as soon as they come out with an increase in interest rates and it starts doubling up, they will come out with, okay, we're going to pay off this debt over here, that debt over there, and then it won't affect them so much. They know exactly just how much debt they need so that they don't have to pay tax. Anyway, that's all for now. I want to say thank you to those people who have bought me a coffee. It helps support the channel. And I have got new levels in the Buy Me the Coffee page. Don't forget to check it out along with the other links in the description below. See you later.